Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Here is an article from US News, and I will have a link to this article down in the description below, but basically it states, when will the housing market crash? A housing bubble burst isn't imminent, but there are a few factors to keep an eye on. Guys, if you start reading a lot of articles, you're gonna realize that there's two camps. There's camp number one is people who don't think the market's gonna crash, and then you have another camp of people that think it is gonna crash. Now, I am on the side that believes that it is going to crash, and really the reason I believe that is because if we jump into the Redfin weekly housing market data and we look at the prices from 2019 and in 2020, 2021, and 2022, we have seen an incredible jump in home prices. We went up from 276 this time 3 years ago to now 381. And now to a lot of people, they might say, oh, that's great, man, property's going up. That's great. You know, for those who have properties, you know, that sounds great. But the reality is that the reason this climbed so much was because the Feds had record low interest rates due to the coronavirus. This dip right here was the coronavirus. And by giving record low interest rates, you know, the people with the means, corporations, they were able to jump into the housing market and basically buy everything up. Now, there was a housing supply shortage, right? So because there was a shortage, it made the prices jump even faster. Now, why would people want to jump in and buy the properties? Again, because the interest rates were super low and people knew that we were going to have inflation. Why? Because we ended up printing $10 trillion to combat coronavirus. A lot of people got a lot of money, and we essentially have to pay that money back. It's very important. You know, inflation leads to this thing called hyperinflation. And if we get into hyperinflation, all bets are off. Everything's going down the toilet. The Fed's number one job is to make sure that we lower the inflation as right now. And in the process, what that's going to do basically is suck money out of the economy and slow down the economy. We are going to see some tough times if it's successful, because like I said, we got to suck money out of the economy, which will crash the economy. Now, we don't want to do it too sudden because it could create more problems. But at the end of the day, that's how you basically tamper down inflation. Now, the best thing that the Feds could possibly do is spread it over a few years so the damage is not as harsh on us, on the people. But that does mean that we might end up seeing a bottom in the housing market, you know, come next year, maybe the year after that. Maybe it's going to take 3 years. It all depends what inflation is doing. Now, what is going to make this price crash? Well, let's jump back into the article, because if you scroll down here, they basically talk about, you know, what's a bubble and whatever. But here's the good stuff right here. What conditions could lead to a housing market crash or housing bubble burst? Unemployment, like I've said in other videos, that when people start getting laid off, they can't pay the mortgage, they start foreclosing on their house, and inventory goes up. When inventory goes up, prices go down. And on top of that, if people are unemployed, you could see situations where obviously you're going to have less buyers in the market. So you're going to have a situation with more supply and less demand. That is a recipe for the housing market to come down. Now, we have home builders. Now, home builders, this is an interesting one. They unfortunately, here, let's read this. Builders have been plagued with labor shortages for decades, and the availability and cost of materials have been an ongoing issue since the start of the pandemic. With even moderate slowdown in buyer activity, home builders may get nervous and hold off. You could have home builders see this as an opportunity to pull back on projects. So this is actually going to keep the housing market like tighter and less supply, because at the end of the day, like, we need more homes, right? That's the way we need to lower the housing market. Here's the only issue that I have with building more homes is that a lot of the jobs are in the congested areas, and a lot of the new homes are on the outskirts. So you know, when you're asking people to commute to the city centers. That creates some of a problem. We need to basically, America, I think with coronavirus, one of the things is, working from home, I think should be more available for people. I definitely think so. Because then people could live farther from like the corporate office or from their job, but work from home, right? And not take that 2-hour commute to work, which is a reality for a lot of people. Sometimes, you might have an awesome job, but guess what? Awesome jobs are generally in awesome areas, in congested areas. And congested areas have super inflated home prices. So you literally have to go out to the suburbs or even farther to the new developments. Well, with the home building shortage, that's gonna slow down, and this is gonna be something that definitely keeps home prices higher. Unless we kind of see an economic downturn, which I definitely think we're gonna have. Buyer demand, here's this one. Buyer demand, the housing market have cooled slightly, but the demand remains strong due to the shortage of homes on the market. Now remember, homes are sitting on the market longer and longer, so the supply is getting bigger. So this will eventually change. Like I've said in some other videos, if you got a really nice house with all the upgrades, yeah, that one is going to get sold, no problem. It's going to get off the market. Remember, buying properties sometimes is an emotional decision, at least for families. Now for corporations, not so much. They just want to get the cheapest price available. Now, but like for families, that want to take their life to a new level and they buy a home, yeah, it's really awesome to buy something that's already done. Now the fixer-uppers, on the other hand, those are the ones that basically the contractors like to come in and lowball, get them, buy them, fix them up, and flip them. Now those homes, I believe, are going to sit on the market longer. And contractors are here to make money. So I really doubt contractors are going to want to jump in, on such a hot housing market to try to flip. They only want to flip when they know they could get the fixer-upper for a dirt low price, and then they could turn around, do a few upgrades, whatever, and then sell it for, $100,000 more, making, on their own, they could make $30,000, $40,000 on a flip. Now, home buyer motivation, right now, people are not motivated, okay? Right now, people are definitely not motivated. I'm gonna jump in, I'm gonna tell you why they're not motivated. First of all, if you look at pending sales, homes are sitting in the market a little longer. If you look at the year over year, it is on the decline, okay? This is a sign right here that we're gonna start seeing a lot more inventory. Again, we're going into the winter months where real estate in general slows down. So we're gonna see, if there's homes that got listed literally like in July or August, and if they're still in the market in December, you're gonna start seeing prices dramatically start going down. If we look at the median sale price, as you can see, I definitely believe we have hit the peak. This was the peak. We're on the way down. Now, here's a monkey wrench I'm going to throw at you guys. And please, I want you guys to actually comment below and tell me what you think. Like I said, there's two camps, right? There's the camp that feels like the housing market is going to be strong, and there's the camp that thinks it's going to crash. Like I said, I'm on the team that thinks that the housing market is going to crash. The reason is because the prices basically went up way too fast. This is basically a bubble. We're looking at a bubble right here on this chart. In 2019, the houses were $276, and today they're selling for $383. The communities cannot support this price increase. So in my opinion, it has to crash. But here's the flip side, okay? We have inflation. And if we can't tamper down inflation, guess what? That is going to keep the houses high in price. Why? Because the essence of inflation is that everything becomes more expensive and stays expensive and gets more expensive, right? So basically, if a gallon of milk costs you $2, and then at the end of the year it costs you $2.50, and then at the end of next year it costs you $3, well, guess what? Everything becomes more expensive. The same thing will happen to the housing market. So the feds are in a situation where they have to tamper down inflation. In the process of tempering down inflation, they're going to raise rates, they're going to shrink the economy. So we are most likely going to go into a recession. We might see a lot of unemployment, and we might see small businesses possibly go under. That creates an environment where people with homes, they can afford their homes, and then they basically go into foreclosure, increasing the supply. And because the economy is in the dumps, you're gonna have more unemployment, so less people able to qualify for loans, and so that there's going to be less demand and more supply, and that is a recipe for a crash. Now, I think right now unemployment is high, right now employment is high. Okay, people are making money and people are happy. All right, right now everything is good. But like, if you remember, if you go back to 2005, 2006, everything was good back then too, until it wasn't, right? Until there was cracks. 2007, we started seeing massive layoffs. 2008, we started seeing massive layoffs. And that's when we started seeing, the housing market just completely crashed like crazy. So are we gonna see that this time around? It's gonna be similar, but it's not gonna be the same. With inflation, I predict it's gonna be slow, right? It's not gonna be, going off a cliff. I see this happening over the next few years. The feds have to make sure that they play with the knobs in a way where they slow it down, but then limit the risk for companies, and people to basically going into a recession. They want to limit that recession risk, but at the same time lower inflation. And it's very, very hard to do. Now, hopefully everything is fine. Hopefully everything slows down. But in my opinion, the only way we get back to normal is if the prices go down to these 2019 levels. That's in my personal opinion, okay? Because communities cannot sustain these levels. People are not getting their raises enough to compensate for this increase right here. They're just not. So unless people who are making $80,000 a year get a raise to make 120, 130, we're not gonna see. We're gonna have to see a change. We're gonna have to see a change. That's my opinion again. So I'm gonna go ahead and finish this video, but I do want to say a big thank you to everybody who's been watching my videos, supporting my channel, giving me comments, giving me likes. You guys are really, really amazing, and I want to thank you from the bottom of my heart. Now, if you guys are watching this channel and if you guys are watching this video and you're not subscribed, don't forget to smash that subscribe button right here and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.